US dollar, Japanese yen. On the weekly chart, we can see that the pair keeps consolidating. Last week, there was a very uncertain candle with long upper shadow and long lower shadow and a very small body. It shows that the market is undecided, that the pair keeps consolidating. It is not yet ready to hit the next Fibonacci level of 78.6% from the decline of 2015-2016. This level is located at 120 mark, and the level of 61.8% Fibonacci at 115.50 is acting as support, as well as 100-week moving average at 114.70. This is a pretty good support, and as long as we stay above these levels, the chance that dollar yen will hit higher levels are still in place. Fundamentally, we still have monetary policy divergence between the Federal Reserve and the Bank of Japan. The Bank of Japan's policies are weakening the yen. We saw that very clearly in December, and the situation is going to continue. So it is a question of time until dollar yen hits 120 mark. This movement of the pair to the upside still looks unfinished for me, and I expect us to see higher levels. So on the daily chart, we can see that there was an attempt to get below 100.50 last week, but the positive US labor market data made the bulls correct to the upside. Here is the piercing line formation, which is bullish, of these two big candles, and this failed attempt to break below 115.50 adds credibility to this level as the market support. So I expect the outlook for dollar yen this week will be rather neutral, be above 115.50 on the downside, but below 118.50 on the upside, probably even limited by resistance at 117.50. We can see that the daily technical indicators are not very positive. They show that this advance of the dollar yen has lost momentum. Moving averages are still in the positive intersection, still show that the overall uptrend is in place, but the consolidation and correction of the pair still hasn't finished. So we will be trading buying dollar yen around 115.50 and probably selling around 117.50. On the 4-hour chart, we can see that the pair is getting ready to test lower levels to get once again to 115.60, 115.50. But here we will have support of 200 period moving average and around 170, where are 150 period moving averages, which show that momentum to the upside has decreased, and the main trading will take place between this green line and this yellow or orange line. So this is the place where dollar yen will likely spend this week. We won't have any important data releases from Japan, so probably the biggest newsmakers will be coming from the Federal Reserve's members, and also US data, which will be released on Friday.